What's up, money growers? Jacob back here with another video to help you guys out today to tell you about a credit card that you should stay away from. So if you're trying to build credit or rebuild credit because you have some bad credit, this is probably one of the worst credit cards that you could get as far as just bad ones. So if you look around online, you'll find some bad reviews for this. So I'm doing this to help you guys out, particularly, in 2022 when credit is going to be very important for a lot of people who've had credit issues from 2020 and 2021 that are going to be carrying over. So this is something you want to stay away from. I want to give you guys a heads up and be on the lookout for this. And also, please, in the comment section below, share your thoughts. I know a lot of you guys are great at helping each other down there, and I do appreciate that because lots of people credit's something that we're not taught in school and we're not taught, in the house for most of us, myself included. So something like this, if you've had bad experience, please share it. Please help somebody else out down in the comment section. And go ahead and subscribe because I'm going to help you guys out and show you why this card, right, with this pretty website and all these bright colors and all this stuff really is not that good. So we're here today looking at Applied Bank, okay? Now, I'm going to be doing a whole series of videos about these cards, or about bad credit cards and what to look for, okay? And ones you want to stay away from. So Applied Bank, their credit cards they have here, actually this one made, their secured one made a list in a video I did about why this is not a good card, particularly because it's got a $48 annual fee on it. But today we're going to be talking about the unsecured classic Visa card, okay, regardless of past credit history. Now, it says Applied Bank credit cards. These are designed for you to build credit. So they have the secured Visa Gold Preferred card and the unsecured classic Visa card, okay? Now, if you want to go over this unsecured card, it says quick and easy application, approval in less than 60 seconds, monthly reporting to all three major credit bureaus. Okay, well, sounds pretty good for the most part. But let's look at the part where you always get into the fine print, okay? This is what I encourage people to do and to look at is to get into the fine print of these cards. So if you click on it here, yeah, okay. No, it hasn't expired. Don't screw with me. There we go. Now it suddenly works. So, all right, we're no longer expired. So if you click on it, you go through here, and you go, it says Applied Bank Unsecured Classic Visa Card designed to build your credit since 1996. That's 25 years of hiding fees from people. So I'm going to show you guys how they actually basically hide. They just move the annual fee on this card to charge you even more. So check this out. So it says, if approved, simply pay $89 processing fee to open your account and access your available credit. So you have an $89 fee right off the bat. All right, so then they hit you with all the points here that are supposed to sell you on the card. Quick and easy approval, less than a minute. Goes to all three bureaus, no penalty rates. Even if you're late, your rate won't go up. You can access additional credit, right? EMV, chip, blah, blah. Does not require perfect credit for approval. Okay, well, does not require perfect credit. Okay, how many people actually have perfect credit? Anyway. Fixed APR, 24/7 access, right? Email reminders, all that kinds of stuff, okay? Now, that's all the stuff they're selling you on. So, so for this, you're at $89. It might be worth it to look at it, but you always want to go and take a look at this stuff here, especially if it's a secured card or any kind of credit builder that you're looking at, because these are the ones that have oftentimes have the highest fees, or fees that just are high in relation to what you're getting with these cards. And I mean, because they know the demographic, a lot of these people who get these cards are not in the best financial situation, or they don't have a great financial education. So you're a bit more vulnerable to something like this. So when you look at this, the annual percentage rate on this card, 29.99% with this card. I mean, that's definitely on the higher end. Okay, 29.99%. Now, it's minimum interest charge. If you are charged interest, the charge will be no less than 50 cents. As we continue to scroll down here, this is the part you want to check out. The fees, the setup and maintenance fees. So look at this. Notice right here, your annual fee will be billed to your account when it is opened and will reduce the amount of your initial available credit. For example, if your account was established with a credit line of $300, your initial available credit will be $225. So right off the bat, they're taking what? 25%? 25% of your credit line. I mean, $75 just bam, taken right out of there. And you're not $300, you're not working with a whole lot to begin with. So that's part of what I'm talking about. If you're not working with a whole lot to begin with, they hit you with the annual fee right in the beginning. of 75 bucks for the first year, but we're going to show how they still get you even more with this, okay? So you're paying the annual fee right off the bat. So you already paid 89 bucks for the processing fee. You've also going to get the annual fee taken out. So you have $300 now, you're down to $225. Now you go down here. Now the processing fee, 89 bucks, one-time fee paid prior to account opening. So you pay 89 bucks to open it up, you 300 bucks, annual fee 75, bam. Now you're down to 225, okay? Now, annual fee for the first year is 75. It says after that is 45. So still, I mean, for what you're getting, I think it's still high, okay? Because there are, actual like secured cards that have no annual fee or that have better offers than this. I mean, you look at the Discover It secured card. I mean, this thing has no annual fee. I mean, it starts out in 8 months. They start reviewing your account to see if you can get an unsecured card. I mean, your deposit, amount starts at 200 bucks, and then minimum of $200 deposit. You go up to 2,500 on this if you want. So, we're looking at this kind of thing for what you're getting here for this annual fee. It doesn't seem like a great deal to me. Now, look at this part, okay? The monthly maintenance fee. This is where they hide this on you. This is where they take this annual fee and they just move it over. That's all they're doing. So monthly maintenance fee, the first year, it's none. So you might think, okay, $75 annual fee, first year, no monthly maintenance fee. After that, it's $625 per month, which is 75 bucks annually. So all they did was take the annual fee from your first year and they just move it over here to your second year or, any year after that. So it looks like on the surface, okay, they're reducing the annual fee. You're getting a little bit of a deal. All they do is they move it over. That's it. They just move it from one fee to another fee. And if you weren't looking at the fine print, you're not going to notice that. So not only do they take 25% of your money, well, here, they start off with an $89 one-time fee. Then they take 25% of your money off the bat. Then they still take $45 every year, and they just move this $75, the 25% they're taking, over here to the monthly maintenance fee after your first year. That's all they're doing is just shifting these numbers around to get more money out of you. Then all these additional card fees, 30 bucks, replacement card, 30 bucks, copying charges, 10 bucks per copy, fees for optional payments, $12.95 for each payment, stop payment fee, 30 bucks, cash advance, 10 bucks or 5%, right, whichever's greater. Foreign transaction fee, 3%. Then late fee, return fee, 38 and 38 for these. So this is the part where it's sped, especially if you're looking to rebuild credit or build credit. You want to dig into this stuff right here because this is where, like I said, you're paying 89 bucks out of, say, a $300 limit. That's damn near a third of the money you're putting up just off the bat. So then you're going to get your $300 limit, and they take 25% of it. And then they still take a significant chunk, and they just move this 25% over here. So this is the stuff to look at, especially when you're trying to build credit or rebuild credit, because this cool website and all this stuff they sell you on, all this stuff here, they try to tell you how great it is. Oftentimes, you dig into these details, it's not so great and it's not that pretty, and you're really not getting much for the amount of fees that you're paying. So be aware. Stay away. Stay away from this. If you guys want more videos like this, tell me about it down below. I can do more videos talking about these credit cards, these bad credit cards, and ones that are really, I would say, in a lot of ways, seem like they're just designed to screw you over, even if they have been around for 25 plus years. So thanks for watching this video. Subscribe if you haven't done so yet. And until next time, keep growing your money.